Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Monero, and we're going to be looking at the continued move that it's in that we've been anticipating for a few months now. So if you guys like the content, please subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. So, Monero is one of those coins that we've talked about before. It tends to move when other coins are not moving quite as much, right? If you go back and look, and right, we're just kind of recapping a little bit from the prior videos. You go back and look at the last market cycle. Monero had a decent move later in 2016. So starting June 2016, it moved up against Bitcoin 1,483%. Okay, when Bitcoin was holding the 20-week moving average, or when it moved above the 20-week moving average, it was in October of 2015. Initially, the dominance of Monero fell, and it fell by approximately 30% against Bitcoin. So the price fell 30% with respect to Bitcoin. Ultimately, it moved back up 171% from breaking the 20-week moving average when Bitcoin broke it. But still, this major move was a delayed move, right? It happened later in the cycle. So remember these dates. We have October of 2015. We had it go down. We also saw it go down in April 2016, and then it started going up in June of 2016. If you switch over to Ethereum and look back at these same time frames, in October of 2015 was right here, and it actually spiked, it went down, and then it spiked 1,800%. But this move ended in March, and then it slowly bled until the beginning of the following year, which, as we know, is when Bitcoin got to its prior all-time high. So when Monero was pumping by 1,483% against Bitcoin, Bitcoin was above the 20-week moving average. It had already held it as support, and it did not happen until June of 2016. Okay, and now let's go look at Bitcoin. So June of 2016, Bitcoin was right around, so right around here. Bitcoin had just gotten to the end of holding the 20-week moving average for an extended period of time, right? I mean, it had held the 20-week moving average for several weeks, and then it moved up a little bit. During this time is when Monero started pumping very significantly against Bitcoin. Okay, we identified this as our potential reaccumulation range for Monero. Look, talking about the similarities that it had, that we saw with Cardano during this accumulation phase, and we said, you know what, it looks like Monero is primed to move out of this reaccumulation zone. At the time, we said potential reaccumulation zone. Obviously, we did not have a crystal ball, but we were anticipating, and the anticipation remains the same, that as long as Bitcoin stays above the 20-week moving average, Monero was going to continue this run. And now you can really see it is starting to go somewhat parabolic here against Bitcoin. And if you take a measured move from the bottom, it's up 68% or so against Bitcoin since late April. So relatively short period of time, it's up 60% against Bitcoin. This is exactly what we had, what we had anticipated. And now we're getting to the point, right, where we want to start. I'm not saying you necessarily need to do it right away, but it's going to get to that point, if you haven't already, where you might want to consider taking some profits. And you don't have to. You might argue that it's still rather early. Of course, I go based off the risk levels, which is part of the premium list. But again, if you see something go parabolic like this, then at some point you might want to consider that. One of the things we spoke about in a video a long time ago was modern portfolio theory. If you follow the channel, we've talked some about modern portfolio theory. The idea is you just plot out the expected return versus volatility of a set of coins. In this case, we did Bitcoin, Ethereum, Monero, and Litecoin. It's color-coded by the Sharpe Ratio, which is your risk-adjusted returns. So this area over here is the efficient frontier. So for a given risk level or volatility, this risk is different from the risk that I was talking about earlier. This is volatility. For a given volatility level, say 80%, there exists a portfolio combination that maximizes your risk-adjusted returns, which has to exist on the efficient frontier. When I did it with I don't even remember how many simulations this was, probably like 1,000 or 10,000. It turned out that the portfolio that maximized your risk-adjusted returns based on historical volatility and historical return since 2015 was 51% Bitcoin, 34% Ethereum, and 14% Monero, and a very small amount of Litecoin. When you increase the amount of simulations or Monte Carlo runs that you have, you can see it changes slightly: 46% Bitcoin, 36% Ethereum, 18% Monero, and 0.2% Litecoin. Increasing it to, I think, 100,000 simulations, it yields 49% Bitcoin, 34% Ethereum, 17% Monero, 0.04% Ethereum or Litecoin. But then you get to the point where, do you really want to continue to run hundreds of thousands of simulations to identify which one identically maximizes your risk-adjusted returns? Or you can just solve it with some quadratic programming. So that's what I did. I calculated out the efficient frontier, which is this area right here. This down here would be the inefficient frontier, if you want to call it that. And it turns out that in order to maximize your risk-adjusted returns based on historical volatility and historical returns since 2015, it turns out that the portfolio that gives you the best Sharpe ratio is 48% Bitcoin, 35% Ethereum, and 17% Monero. And unfortunately for proponents of Litecoin, it is 0%. It does not mean that Litecoin won't go up. It just means that there's an opportunity cost to holding it, and holding it does not justify the opportunity cost that you have to pay by not having it in either Bitcoin, Ethereum, or Monero. So when we go back, when you look back at where Monero is now, we've seen it make a pretty substantial move. And when you look at coins like Litecoin, they don't tend to make incredible moves until very key times, like when Bitcoin gets to its prior all-time high. It doesn't really seem to do a whole lot in the meantime, except for, say, Litecoin, a move back up, a short-term move back up in anticipation of the Litecoin halving. But even with that, I still contend that Monero is a better hold than Litecoin, and I think that the risk. I mean, it's not financial advice. I just think that well, that's the great thing about it. It doesn't matter what I think. The data suggests that it makes more sense to hold Monero than it does to hold Litecoin. And I think that our observation of this potential reaccumulation phase down here has actually played out quite nicely so far. I don't anticipate the same type of move like we saw over here. This one was 1,483% ROI against Bitcoin in a relatively short period of time. If we were to see that happen again, which I definitively do not think we would, but if we were to see it go up, say 1,400%, we would be looking at a ratio of close to 0.1. Okay, so that would mean, if Bitcoin's at 10K, that means a $1,000 Monero, and I just simply do not think that is going to happen anytime soon. If I pull up the Monero USD chart, let's go ahead and pull that up. You can see that we're actually getting close to the prior local top that we had back over here in July of 2019. I actually do think there is a good chance we break this local top. I think the main thing that would stop us would be if Bitcoin falls below the 20-week moving average. Now, one of the things we've talked about on the channel, right, is that most altcoins will continue to lose value against Bitcoin every time Bitcoin retests the 20-week moving average, right? This is one of the things we've contended for a very long period of time. This orange line is the 20-week moving average, but on the daily time frame. And every test of this generally sends altcoins lower than they were the prior time that it tested it. Our contention with Monero for the last few months has been different. It's that the data suggests that this coin will in fact move upwards in lieu, despite if Bitcoin tests the 20-week. Maybe it moves down on the short term, like a day or two, but the general trend should be up. And I think that is exactly what we've seen. We've watched Monero slowly gain more and more momentum, and it has really started moving back up. I mean, remember, Monero did get hammered pretty hard. If you look to see the peak that it had against Bitcoin in August of 2017, even at the current prices, it's still down 71%. At the lowest, it went down approximately 84% against Bitcoin, 85%. So it still got hammered pretty hard. And I do think, there's a lot of people out there that would argue that Monero is what Bitcoin was meant to be, right? In terms of its privacy features and its fungibility of the token. So obviously there are certain things related to privacy coins that might have, might have some logistical things that they need to overcome in terms of intervention by governments and saying, you know what, you can't have this on your exchange or anything. But I still contend that Monero, will likely do quite well this market cycle if the cryptocurrency the asset class as a whole does well. And the important part of that, right, is to consider that it's easy to pick 20 coins and say, oh, I think this one will do well, right? Because if Bitcoin does well and then the whole market does well, then you could essentially throw a dart at a dartboard and likely hit one that's going to do well. What's key is identifying, when these, in my opinion, right, it's identifying when these moves are going to occur. And this is why, moving out or moving into Monero during the accumulation range rather than moving into it way back here and then just waiting forever for it to fall and then eventually come back up. They're in traditional markets, they say timing the market is not nearly as important as time in the market. With cryptocurrency, I do think that timing the market is very important. You do not want to be buying an asset and then watch it go down 90% against Bitcoin over the next 2 years, right? This is just something you simply do not want to do. And there's what's known as the time value of money. And so the idea behind the channel, right, is to ride these moves by different coins at different times and then to systematically, dynamically DCA out of them back into lower risk coins. It turns out that there is a coin between Bitcoin and Ethereum that it would make more sense to DCA to from Monero if you want to lower your overall risk, right? We talk about that on the premium list a lot. I will remind you that if you want access to the premium list, check it out at intothe-cryptoverse.com. You get access to a weekly premium report, a weekly premium video, a risk dashboard, which is what I use to trade, a Telegram alerts channel where I post my candid thoughts on not only the crypto markets, but on other markets as well, primarily crypto, and then also a private Telegram chat room. So check it out. You can pay with crypto and for a discount and actually pay for a lifetime membership if you want to pay with crypto. So let me know what you guys think. In the last premium video, we actually did talk about Monero, the Monero breakout against Bitcoin. So I would say this is business as usual. This is something that we identified and said it seems like it's in a pretty good accumulation zone. Let's just wait for it to slowly and methodically move and break out against Bitcoin so that we can leverage this in order to continue our strategy of continued rebalance of our portfolio within cryptocurrency. And go about it a more systematic way. So if you guys like the content, please subscribe to the channel, give the video a thumbs up. Also, do check out the Telegram channel, which you can find a link to in the description below. And then finally, check out the premium list if you want access to exclusive content. That'll wrap it up for this video. I'll see you guys next time. Bye.